Hello everyone. Today, we're diving deep into a fascinating, and perhaps critical phase for the cryptocurrency giants, Bitcoin and Ethereum. We're going to explore what the current price action might mean for the future of these digital assets, and more importantly, for your investments. Have you ever wondered what happens when even the most steadfast long-term holders start seeing red? What does it signal for the broader market? And what opportunities or risks might emerge from such a scenario? Let's unravel this intriguing situation. This isn't just about price movements. It's about the underlying market psychology and the very foundation upon which these digital economies are built. Recent analysis from crypto analyst Barak Kesmasi, shared on CryptoQuant, highlights a very specific and impactful metric: the average purchase price of accumulation addresses. For Bitcoin, this key level is identified at $72,400, and for Ethereum, it's $2,500. These aren't just arbitrary numbers. They represent the average price at which long-term holders, those who are accumulating, rather than trading frequently, acquired their assets. Therefore, these levels can act as significant resistance points, or even more critically, as indicators of market sentiment among the most committed participants. Understanding these price points is crucial, because they reflect the conviction of those who have the most skin in the game, the whales and institutional players who move significant capital. The concerning news is that both Bitcoin and Ethereum are currently trading below these crucial accumulation address average prices. This puts us squarely in what Kesmasi describes as the cold water phase. It's a period where even long-term accumulation addresses are experiencing losses. Think about that for a moment. These are the investors who typically buy and hold through market volatility, confident in the long-term potential of these assets. They are the hodlers, the true believers in the decentralized future. When even they are underwater, it suggests a profound shift in market dynamics. This isn't a minor dip, it's a test of resilience for the most steadfast elements of the crypto ecosystem, potentially signaling a deeper re-evaluation of market fundamentals by those who traditionally ride out the storms. But what exactly are accumulation addresses? These are wallets that show a consistent pattern of receiving and holding cryptocurrencies, with very few or no outgoing transactions. They represent the conviction of long-term investors, who believe in the fundamental value and future growth of Bitcoin and Ethereum. Their average purchase price, or cost basis, is therefore a powerful, psychological and technical level. It provides a benchmark for the collective entry point of these strategic investors. When the market price falls below this collective cost basis, it creates a unique pressure point, forcing these long-term holders to confront unrealized losses, a scenario that can have significant implications for future market behavior and supply dynamics. Now, the big question is, what happens if BTC and ETH manage to break above these accumulation address average prices? The analysts suggest that such a move could signify a fundamental shift in market structure. Imagine the relief and renewed confidence among these long-term holders. Successfully reclaiming these levels would not only bring these holders back into profit, but also validate their long-term conviction, potentially encouraging further accumulation and attracting new capital into the market. It's a potential turning point that could signal the end of the cold water period, and the beginning of a new growth phase, characterized by renewed optimism and a re-strengthening of market foundations. This breakout could also act as a strong bullish signal for short-term traders, who often look to these significant technical levels for confirmation of trend reversals. Let's delve a bit deeper into Ethereum, as recent data paints an interesting picture. Unlike Bitcoin, which saw its long-term holders engage in some selling activity since January, Ethereum's long-term holders have been consistently accumulating. This divergence is significant. It suggests a unique set of drivers and a different risk-reward calculus for ETH investors compared to BTC. Why are ETH holders so steadfast in their accumulation, even when facing losses? What unique value proposition does Ethereum offer that sustains this level of conviction among its most dedicated supporters, even when the market tests their resolve? Several factors likely contribute to this persistent accumulation of Ethereum. Firstly, the burgeoning DeFi ecosystem offers numerous opportunities for yield generation. Holders can put their ETH to work in various decentralized finance protocols, earning returns that mitigate some of the price volatility and generate passive income. This active participation in the ecosystem provides an incentive to hold, rather than sell, even during downturns. Secondly, staking has become a hugely popular avenue for increasing ETH holdings. A remarkable 27.5% of the total ETH supply is currently staked, and an additional 16.3% of that is deposited into restaking protocols like EigenLayer. This not only earns passive income, but also signals a long-term commitment to the network's security and growth, effectively locking up supply and reducing immediate selling pressure. These staking and restaking opportunities transform ETH from a purely speculative asset into a productive one, generating real yield for its holders, which undoubtedly strengthens their conviction. Thirdly, and perhaps most speculatively, there's the ongoing anticipation of an Ethereum spot ETF approval in the United States. While Bitcoin has already seen its spot ETFs approved, the market is now keenly watching for a similar development for Ethereum. The potential for institutional capital to flow into ETH through these ETFs is a massive bullish catalyst, and long-term holders might be positioning themselves to benefit from this future event. The approval of a spot ETF would not only provide a regulated investment vehicle for traditional investors, but also confer a level of legitimacy and mainstream acceptance that could dramatically increase demand and price appreciation. This prospect alone is a powerful motivator for long-term accumulation. Even in periods of price weakness, we've also seen intriguing activity from so-called anonymous whales in the Ethereum market. Recently, a single anonymous whale address withdrew a substantial 63,324 ETH, worth approximately $131 million, from the Kraken exchange. The average purchase price for this particular whale was around $2,072. Such large-scale withdrawals from exchanges to private wallets are typically interpreted as a strong signal of accumulation, indicating a long-term holding strategy rather than immediate selling. This whale's actions, and likely others, like them, contribute to the overall accumulation trend observed in Ethereum, reflecting a deep conviction in ETH's future performance. These movements by large entities are often closely watched by market participants, as they can foreshadow significant price shifts. Furthermore, the flow of funds into existing Ethereum spot ETFs in various regions is also a positive indicator. We've seen significant net inflows, for example, 84.5 billion Korean won, into US Ethereum spot ETFs. This demonstrates a growing institutional and retail appetite for Ethereum exposure through regulated investment vehicles, further solidifying its long-term appeal. The increasing acceptance of crypto ETFs globally provides a more accessible on-ramp for a wider range of investors, bridging the gap between traditional finance and the digital asset world. This continuous flow of capital, especially from institutions, indicates a maturing market and a recognition of Ethereum's long-term value proposition, beyond its current price fluctuations. So, what does this all mean for you, the viewer? We're currently in a period where the resolve of even the most dedicated long-term holders is being tested. When Bitcoin and Ethereum are trading below the average price of these accumulation addresses, it can be a challenging time for sentiment, creating uncertainty and fear. However, it also presents a potential inflection point. If these assets can regain and surpass those critical average prices, it could indicate a powerful shift in market structure, leading to renewed optimism and potentially significant upward momentum. But what if they don't? What if the cold water phase persists, or even deepens? What strategies would you employ in such a scenario to protect your capital, or even capitalize on potential opportunities? How do you weigh the risks against the long-term potential in such a volatile environment? The current market environment is a delicate balance of tested resolve and potential turning points. It underscores the importance of understanding the underlying metrics and the psychology of different market participants. The average purchase price of accumulation addresses offers a unique lens through which to view market health and potential future trajectories. Keep a close eye on these levels, as they could provide crucial clues about where Bitcoin and Ethereum are headed next. Do you think we are at the cusp of a major market structure change, or are we settling in for a prolonged period of consolidation, testing the patience and conviction of even the most seasoned investors? The answer, as always, lies in the unfolding dynamics of the market, driven by the actions of countless participants, from the smallest retail investor to the largest accumulation whale. Stay informed, stay vigilant, and consider what these profound shifts could mean for your financial journey, and more broadly, for the future of decentralized finance.